Well, China is considering exemptions from its 125% tariffs for some U.S. goods, according to Bloomberg, as tensions between the two nations weigh on certain industries. Messaging on trade negotiations has been mixed, as the president says talks are underway. Beijing saying they're not. The volatility playing out in markets as investors seek safety outside of the states. Here to discuss those opportunities with us, we've got Guilherme Valle. He is ABS Global Investments founder and emerging markets portfolio manager. Guy, great to have you here. I do want to have you put on your geopolitics cap for me for a second. China continuing every morning when I wake up, they're denying the negotiations that the president said that we were having when I fell asleep. But the president also this morning saying 145% tariffs is not sustainable in his interview with Time. Where does that leave us in these negotiations today?
Hi, Madison. Really hard to talk about this because the news is going to be changing every single day. The one thing we can say is that China is a very proud nation. They're still recovering from their century of humiliation. And over the last decade, they have really steered away their economy away from exports into domestic drivers, right? So what I can say is that I really believe that this escalation will come from the US. So it's going to be a US decision to start offering this off-ramp. And then I think hopefully it's in everyone's best interest to have this being de-escalated. What
is your percent assuredness that the U.S. is going to start that negotiation in earnest?
I think it's again, if you see the last communication from the president is that he's been very optimistic that he can find a deal. And I think that deal will start with the US, right? So maybe China can offer some symbolic wins to the US, but substantial concessions, I think, will need to start from the US side.
And talk to me about how you're seeing this playing out in markets, because obviously we're seeing investors seek safety outside of the US. Where are you seeing perhaps an opportunity that investors might be missing, an area of emerging markets that you're not seeing as much flow into than you might think is warranted?
I think overall, emerging markets are on sale, right? Emerging markets has always been cheaper than developed markets in general. Mm-hmm. But not only now emerging markets trading at around 12 times PE, which is dramatically lower from the US, which trades over 20 times, but also emerging markets be trading below the average of emerging markets, right? Which typically is around 13 to 14 times. So we see emerging markets in general on sale, but we see many cheap markets. So China is one that has been very cheap. Even India, where all the fundamentals are extremely positive, has derated as well, right? You have many stories in Latin America. Probably one that is totally overlooked is Chile, right? Chile has a very organized market and has been trading also at historical low valuations with very low interest rates and the potential for positive change on the political side, right? So across the board, we see many opportunities across many emerging markets. And I think finally investors are taking a look outside of the US, right?
Mm-hmm. Mm-hmm. Well, that's exactly where I want to go, Guy. I think you'll get a kick out of what some sources have told me is a total panic about whether or not US Treasuries are still safe, because there's just nothing like it. There's no safe haven like US Treasuries. And as an emerging markets expert, I imagine that you think there are other areas of safety globally. What would you say is the biggest potential hedge or safe area of investment in emerging markets right now?
I think for me, I go back to valuations, right? So when you have markets that are trading at historical lows, it's trading as low as they were trading during the great financial crisis in 2008. For me, that's the biggest safety you can find, right? So countries, you look for domestic stories in emerging markets, they're not exposed to US policy. And you try to leverage on the most powerful trend in emerging markets, which is the expansion of middle class. So you look at the US, you look at some other developed economies, middle class has been squeezed. And you take India, you take Saudi Arabia, you take many other examples in emerging markets where actually the middle class is expanding, right? So for me, this is the most powerful trend that you're going to have for many years that has been totally overlooked over the past 15 years since the advent of QE in the US. And I think for me, this is a safe bet. And that's where you can find great opportunities at very discounted valuations.
Talk to me about what you're looking at in terms of pension funds. Do you think that some of those, big potential whales in the room are interested in the Sell America trade? And are you seeing any activity indicating where they're heading?
I think, the US still have a very vibrant economy. I think it's still going to be I mean, you have amazing companies with winner-take-all type of business models that's still producing, outstanding profits. So it's still going to be the core of all the allocations. But at least I see most pension funds questioning now the narrowness of the US market and some of the high valuations and looking outside of the US. So I think it's a very positive for international flows and more specifically for emerging markets. We see most of our investors are pension plans in the US, and we see they're continuing to do more allocations outside of the US.
Guy, I want to end where we started, which is on, the trade war. There's this rhetoric that has gotten better, quote unquote, in the US over the last week. This commentary about negotiations, Treasury Secretary Scott Bessent and the president saying 145% is just too high. But the actual policy, it hasn't changed over the course of this week. How optimistic are you about the rhetoric turning into actual policy short term?
I think I'm positive because I think it's no one's interest to have this effective trade embargo, right, between the two largest economies in the world. So I think cool heads will prevail. But again, I go back to the point that this will have to start with the US. Again, China may offer a symbolic win to the administration of the US, but the real substantial off-ramp needs to be offered by the US.
Guy, great to have you. Thank you so much. Hope you'll come back soon.
Pleasure.
Appreciate it.